Japan is getting more conservative. There are so many more policies against immigration, and how do you feel about that? This is the kind of questions that I've been receiving lately, either from my family back home, friends back home, or my audience throughout my social media. And my answer is, what do you want me to feel anything about it? For context, I'm from the Democratic Republic of Congo, and I came here to Japan through a governmental scholarship. Amongst more than 3,000 people, I was chosen, quote unquote, to come here for studies. Then I found a job and stayed. And I've been doing my best to contribute to the society since then. And if you ask me and the history, Japan has been voting conservative for a while now. And now I think we just have a much bolder and louder prime minister. But also get this, the total foreign residents in Japan is 3.9 million. So that's about 4% of the total population in Japan, and I am literally exaggerating. Now in that
Morning, everybody. Morning. How y'all boys doing, man? How y'all boys feeling? Man? Good morning. Currently at day 26. Day trading options. Market just opened. It's 8:31 a.m. Let's see what we're working with. Okay. Yeah, market just opened. Right here. Appreciate everybody stopping by. Hope y'all had a good night's sleep. Hope y'all doing well right now. Feel me? I'm tired today per usual. But we ain't gonna let this stop us. We're gonna try to make up today, come back. Cause we lost like $100 yesterday, I ain't gonna lie. It's crazy. But hey man, we're gonna try to redeem myself today. Maybe we can make back double, man. Who knows, hopefully. Oh wow, the AI mod actually did something for once. I think it's the first time I've seen the AI mod delete one of these bot comments. Found that AI mod did something, bro. But anyway, hope I had, you know what I'm saying? Good night's sleep, man. What y'all have for dinner, let me know. We're gonna wait 30 minutes, kind of look, see what the market doing. Wait to put a trade up. Wait till like 9 o'clock. Let me watch this video. Let's see. Oh my god. I got a tee up, chat. Oh my goodness. I got a tee up, bro. I got a lock in here, bro.
Recording.
Let me look at this. Appreciate the 2 years in the chat. Gosh, great. Kind of look like Kaniti from yesterday. Kind of the same price. It's just a pre-market assumption. Oh, that's from just yesterday. But I'm hungry, boy. I ain't gonna lie to you. But I'm hungry. Man, I'm hungry. Yeah, doing a check. I'm about to put the video up real quick. Should I leak my notepad? Let's see where everything at. Dow S&P 500, Nasdaq now pointing to Tuesday declines in the wake of history, making intraday crude oil move. But they said jump was gonna be down yesterday. Jump went straight up, bro. Jump went straight up. Go down 6%, go to 2.5. All right. Okay. 11 down here. I think I forgot to get my daily bonus. Did I get my daily bonus yesterday? Everybody going stupid on that little instrument. Whatever that is. Random days aren't really flat talking, but be real. Hey.
Hi, this video is to show income investment velocity blueprint. So I'm starting this journey and I want to show it from square one. There's other creators who I admire and I listen to, and they already have $100,000, $200,000, $700,000, $1 million in their accounts, and they're not showing this process from the beginning straight through. So I really want to come at this from a different angle. This is my journey. This is not any kind of financial advice, just so you know. But this is my guide to accelerating dividend growth with margin and smart hedging. We're going to look at how I utilize my W-2 income to leverage margin and to work on building monthly dividend income faster. So, disclaimer, as you know, this presentation is for informational and entertainment purposes only. It does not constitute financial advice. This is entertainment. This is my journey of what I am doing, following some of these other creators. So what is velocity banking? Velocity banking is the process where your W-2 paycheck is deposited into a line of credit, like a personal line of credit, and it immediately reduces that principal balance. It minimizes the interest charges, and then what you do is out of that line of credit, you pay all your monthly bills and expenses. And the goal is to keep people into a line of credit, like a personal line of credit, where you're creators. So what is velocity banking? Velocity banking is the process where your W-2 paycheck is deposited into a line of credit, like a personal line of credit, and it immediately reduces that principal balance. It minimizes the interest charges, and then what you do is out of that line of credit, you pay all your monthly bills and expenses. And the goal is to keep the line of credit balance as low as possible for as long as possible. So when the line of credit is low enough, then you would chunk payments out to your debts to pay them. Now, what I'm going to be doing is low as possible for as long as possible. So when the line of credit is low enough, then you would chunk payments out to your debts to pay them. Now, what I'm going to be doing is, it kind of reminds me when I watched one of the creators, they were talking about this, and I said, this sounds like velocity banking. So the traditional concept is using income and credit strategically to pay off debt faster. What we're going to do is we're going to use income and margin to buy income generating assets faster. Our outcome is going to be to replace our expenses with our dividends, and then you can be free. The faster you can get your income into assets, the quicker your monthly cash flow will grow. My goals personally is to stay under 50% margin use, and I want to be greater than 1,000 monthly dividends in January 2026. Let's see how that goes and see where we end up. You can see the core ID, deposit all our...
How that works? So what he doing? He like using it. His dividends up. At least you gotta pay the margin.
W-2 income into the brokerage account. I use E-Trade. We're going to use margin bridge, so we're going to temporarily cover our living expenses utilizing margin. So we're going to buy some high yield ETFs that will help us build monthly dividend income systematically. We're going to reinvest the dividends, and we're going to use it to cover our bills. And then we're going to add some hedges to help protect our capital during market downturns. So W-2 income, that's our accelerator. So you want consistent capital.
Very interesting strategy. Very interesting. Got money to the side, put it in a brokerage and do it like that. Interesting. Very interesting. See, I could do that. Interesting. If Chat, y'all know what DeFi is? Put that in DeFi. It's it one dog. Only thing I see is like, it's like that. Would that be considered a thing? Or no? Everything says. Put go down. So if I want to go down, 75. If it kind of broke. Oh, I could reach it right there. Would have been messed up. There's one kind of right here. You gotta see all them zones. So that's what it was talking. I see it now. You gotta pay attention to all them zones, bruh. another level like right here. Let me just look. Chat, what y'all eat for breakfast this morning? Let me know. I'm hungry. What y'all eat for breakfast?
Inflow. Regular paychecks provide reliable funds to grow your portfolio every month. You're not waiting for extra money to invest. You buy in any market condition, amplified by margin, so you're using borrowed funds to reach your dividend target faster. Actually, you're using it for your expenses. So margin bridge, the borrowed funds from your broker is secured by your portfolio value. It's like the equity in your home. It's a line of credit against your existing asset. Why use it? It covers your living expenses while your dividend incomes will build and allow you to live a free lifestyle in the future. Key risks: high margin use increases risk of maintenance calls, and margin interest reduces your net returns. So this is a temporary bridge, not permanent debt. I'm currently using Cornerstone, and these are, I'm using 50% allocation. They require 30% margin requirement. They're my core income engines. I'm using high yield YMAX, QQQY, QQQI, and maintenance of a free lifestyle in the future. Key risks: high margin use increases risk of maintenance calls, and margin interest reduces your net return. So this is a temporary bridge, not permanent debt. I'm currently using Cornerstone, and these are, I'm using 50% allocation. They require 30% margin requirement. They're my core income engines. I'm using high yield YMAX, QQQY, QQQI, and SPYI, 25%, and that's 30 to 50% margin requirements. That's mid yield and growth. MSTY, 12.5%. Margin requirement is 100%. That's high yield, no leverage. NVDY, 12.5%. Margin requirement is 50. It's high yield and has partial leverage. So that's my allocations. You know, again, this is entertainment. This is what I'm using. So understanding margin requirements. So 30% requirement means that for every dollar you invest, 30% of equity is tied up. The examples are CLM, CRF, and GOF. 50% requirement means for every dollar you invest, 50 cents of equity is tied up. NVDY, QQQY. 100% requirement means that every dollar invested is $1 equity tied up. An example is MSTY. Lower requirement means you have more buying power. Balancing yield and margin. So what's the trade-offs? So high yield, high requirement. So MSTY and VDY means faster income, more income, but you have less buying power. Low requirements like CLM, GOF, and SPYI are slower, but you get more buying power. So key takeaways for all this: you want to accelerate with W-2 and margin use. You want your regular income to drop into your account. Balance your portfolio. You want to have a mix. You want to have a safe portfolio. You want to monitor your margin use carefully. You don't want to go under 50%, and you want to just stay the course, just meaning to be consistent. So on this percent, and you want to just stay the course, just meaning to be consistent. So on this YouTube channel, I aim to provide full transparency into applying this strategy in real time with all the real-time messes that we see. So like I was saying earlier, other content creators, they show that, they already have a substantial amount of money. I'm coming at this from the other side. We're starting with nothing. We're starting with nothing practically. You're going to see every step of this process. Back in February, I was investing in Coney. I was putting away maybe $100 every paycheck. I built that up to $3,000, which I transferred into E-Trade when I saw this, and I saw E-Trade would be the perfect account. So it was an individual account. I transferred everything over to a joint account, and now I've had 2 paychecks since that have gone into the account fully. So with the foundation in place, let's turn to the current analytics that I have. So I'm going to load up the account. Let's see what we got. So this is my joint account here. So my net account value right now is $7,245. Today, we have a day's gain of $21. My total unrealized loss is $154. And you can see my portfolio here. So I have CLM. I have a total value of 2,400, CRF same, GOF same, MSTY 1,600, NVDY 1,700, QQQY 861, QQQY 879, SPYI 828. I have a short SQQQ to maintain shorts at 34, YMAX at 864. So my performance maintain shorts at 34. YMAX at 864. So my performance, let's go into that page. So as you can see, my joint account is here. I'm at 1.59%, and we'll see how it goes. We're just going to watch and see. I do want to show my balances. So the total gross value of the securities is $14,305. I'm using currently 50.66% margin equity. One thing that I note, and this is part of the mess that we talk about, is I have another week till paycheck, and margin is 180 is remaining. So I might have to sell some assets in the order to raise cash so I have money to live on. So that's something that I have to think of. One other thing, let's look at what the account income is. Hold on, we're just going to go into that section next. So estimated income is $4,579. You can see so far we've gotten, so for August, estimated income is $250, but then it shows that we have an estimated income of around $390, $375 all the way through. So as I said, we'll see how this goes. I'm going to show you also my transactions just to show you. This is something that I live out of. So, these are, regular places that we go to, we see. So, Dunkin' Donuts, Wawa, we use, this, I live out of this account currently. All right, well, thank you for joining me today. I plan to do regular uploads as things happen. So if I start selling assets for cash, when my paychecks come in, I'm going to do other videos to kind of show my journey through this. I hope you enjoyed this video. Any comments or any thoughts are always greatly appreciated.
See, you should stand within this area, still support resistance area. Kind of just consolidating very tight area. That could be one too. Yeah, man, just stand in this area.
Thank you so much for joining me.
There's a stick for Version.
Hi, this video. Thank you so much for joining me.
Hi, good morning, everyone. Hope you're having a great weekend so far. This is Sean with Paycheck to Portfolio. Today, I'm going to talk about the Paycheck to Portfolio system explained step by step. I have it mapped out in a Word document, but first I want to do a quick portfolio update here.
Pay down margin. Reinvest into dividend and producing assets.
You can see my net account value sitting at $131,978. My total unrealized gain is currently sitting at $37,119, or basically 16%. Last week, another good week in the market. So you can see Friday, I had a $752 gain. If you look at performance, I'm going to touch on the 1 year, 2 year, and 3 year performance. So let's start with the 1 year. You can see it 1 year here with the chart. My account is up 55.61% right here, which you can see. The S&P is up 17. The NASDAQ's up 21, basically 22%. The Dow is getting close to 11%, and the Russell's basically at 0. At the 2 year performance, you can see I'm sitting at 67% cumulative. S&P is 41. The NASDAQ's basically 50. The Dow's 27.5, and the Russell's sitting at about 15%. On the 3 year, you can see I'm at 93.5 basically. The S&P is at 65. The NASDAQ's at 84. The Dow's at 43. And the Russell's at 29, almost 30%. So what this is this is our cumulative return. This includes the growth of the portfolio and the dividends received. So I'm just going to show that for clarity because I get a lot of questions around this. So if we go back to positions, what's baked into that cumulative return is the total unrealized gains, the growth of the portfolio, in addition to dividends that I have received. This is my estimated dividend return over the next year, which basically the way E-Trade calculates this is your last dividend received. They'll annualize that out over a year. So currently I'm sitting at $43,141 anticipated dividends. You can see in the next 1 month that equates to about $33.86. You'll see that as you watch, that varies from $33,000 to $4,000 depending on payouts. If you go to transactions in E-Trade and you type or you select all dividends here and hit apply, you can look backwards and to see the dividends that have actually hit the account. So you can see I get quite a lot of dividends that roll in on Fridays every week and then every month as well. So you can see all that on E-Trade and it will show you those specifically. So jumping right into the Paycheck to Portfolio system, I've shown this image on a few videos and I like it just because it keeps things simple. And then we'll talk about the Word document and the step-by-step, each step along the way. So basically, if you're new to my channel.
Just watching the video real quick, trying to trade. Let me know how y'all doing, man. Appreciate all the support. Pretty tell me how y'all doing, man.
I don't live out of a traditional checking account. All of my W-2 income rolls into my brokerage account.
See, it's kind of just so cricket, dog.
With those funds, I'll buy dividend and growth assets with those.
Read this.
funds. And then what my dividends don't cover, I'll float with margin to pay out of a traditional on the way. So basically, if you're new to my channel, I don't live out of a traditional checking account. All of my W-2 income rolls into my brokerage account. With those funds, I'll buy dividend and growth assets with those funds. And then what my dividends don't cover, I'll float with margin to pay my bills. And over time, what's going to happen is this cash flow cycle is going to continue.
Imagine I would have put it right there. What's going on, bro? What's going on?
With funds. With those funds, I'll buy dividend and growth assets with those funds. And then what my dividends don't cover, I'll float with margin to pay my bills. And over time, what's going to happen is this cash flow cycle is going to continue, which will snowball my growth and my income and eventually pay all of my expenses and allow me to live free and growth assets with those funds. And then what my dividends don't cover, I'll float with margin to pay my bills. And over time, what's going to happen is this cash flow cycle is going to continue, which will snowball my growth and my income and eventually pay all of my expenses and allow me to live free from a 9-to-5 job, or to live a FIRE lifestyle, which stands for financially independent, retire early. As you can see, Albert Einstein has a quote down there that says, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. And so I'm getting the benefit of my whole paycheck being fully invested and compounding year after year. Sometimes I'll see comments in the comments section of YouTube saying, how are you going to get over $1 million worth of performance in 5 years, where a large chunk of that over 5 years is coming from my own W-2 income that would have been spent to zero. And then I would have had to start the cycle all over again of going back to work, trading my time for money, spending to zero, and investing 10%. Instead of the normal cycle that we're taught, I'm investing 100% on the front end, allowing it to compound, which essentially will set me free quicker. So, all right, I want to talk about the paycheck to portfolio system explained step by step here on a Word document. So step 1 is deposit all earned income into your brokerage account. All about the paycheck to portfolio system explained step by step here on a Word document. So step one is deposit all earned income into your brokerage account. All income sources, whether it's W-2, real estate income, I don't have commissions or bonuses or anything like that. I'm just trying to show you it's all earned income comes into this bucket. This account becomes my central financial system, replacing the need for a traditional checking account. So all earned income sources come into the brokerage account. This account.
I can't, bro. I'm just, I don't know. Okay. I don't know what to do, bro. I need to get sent it. But this is not working again. Let's see. This is not working. It's not working at all. Did I do a limit? Hold on. Did you do a limit? Oh my gosh. It's looking good for me, man.
Becomes the central system. Historically,
I don't know. I don't know why I keep doing it. I just need to just let it rock. It's not ridiculous, man. Oh my gosh. Oh man, another bot comment, man. Great. I guess the AI one didn't see this one, huh? The AI bot didn't see this one.
We would go put our funds into a bank account. The bank would take your money. It's not in a vault, as I think we all know, and they would invest that into investments that would pay 7, 8, or 9% to other people, taking out loans and generating cash flow with your money, and then paying you a very minimal amount. So step 2 would pay down margin, then acquire assets. So as new cash comes in, it automatically reduces my margin balance. This boosts my equity percentage and unlocks new buying power. Once my margin is reduced and my equity level goes up well above 50%, that percentage or cash I'll reinvest into more generating assets, whether they're growth or dividend assets, which creates more, obviously, cash flow and will get me closer to living free from a 9-to-5 job. I invest in the 3 separate buckets I want to talk about. So the first bucket would be my drip stocks, which I consider my compounding engine. So CLM and CRF, the cornerstone funds I talk a lot about, and you can go find that on prior videos if you're interested. These drip monthly at the NAV, which stands for net asset value. So every month you're getting immediate gains with your dividend drips. With Goff, that's another closed-end fund. It drips monthly at 5% discount to its NAV, so it has a good dividend and it drips at a discount. SPYG is an S&P 500 growth ETF. McDonald's, Costco, and others I also set to drip to compound there as well. These funds reinvest automatically, compounding my share count and income each month. The effective yield with the closed-end funds up above is approximately, and that's Cornerstone Goff that I'm talking about here, or approximately 21.35% when factoring in the NAV discounts and compounding effects and how that works. Covered call ETFs, this is what I consider my cash flow workhorses. These are not all the covered call ETFs I invest in. I have a portfolio review, again, on my videos. You can see my whole portfolio. And you can go to the YieldMax website, the Roundhill website, the Neos website, the Defiance website, and look up these annualized projections for yourself. MSTY is currently projected to be at 76%, YMAX 69%.
I mean, I got how many people here? 4 people. See, I got 6 some other thing. Should y'all really here? Be honest, let me know. Got 4+ people in here watching me lose money. Now that disturb. Watch Bill come in here when I'm down this bad, bro. Like at this point, it's bad, bro. It's just like whatever, bro. At this point, bro. Like, homie, like what is this, bro? Bro, you can see like we in a downtrend. We're just trying to just playing around. It's going up, down, like, bro, it's like a joke, bro. It's a literal joke. So it's going up, down. In a downtrend, though, it's like, bro. I don't even know, man. Truly.
QQQY 40%, QQQI 15%, and SPYI 12%. So if you just take in this example and you calculate a blended distribution rate across these funds, that's 42.24%. In the calculator I show on other videos, our Fire Model Pro calculator that you can get on our membership section of Discord, I'm conservative with this blended distribution rate, and I calculate about a 32% blended yield. So you can see it can be a lot higher than that, just for clarification and how you see how the system works. So these pay weekly or monthly cash dividends. So my portfolio on average currently generates between $3,500 and $4,000 a month in cash dividends. Again, that's projected out over the next year. I'm currently at $43,000 a year, and that will fluctuate based on the next distribution round. This cash is used to cover margin interest. As an example, I paid $850.
We used it to pay margin interest. $3,500 for $5 a month. Margin interest. Used it to pay the margin interest. We use that money after interest. Then use the 1500 to use 1500 to put up to an asset. Yeah, it's not good at all, brother. I'm really about to blow through this whole junk. That's crazy.
$50 in interest in June. My interest rate is 8.44%, but I brought in about $3,500. So you can see I'm creating a business spread just like any business would do with an SBA loan. This cash is used to cover margin interest. As an example, I paid $850 in interest in June. My interest rate is 8.44%, but I brought in about $3,500. So you can see I'm creating a business spread just like any business would do with an SBA loan to create cash flow. I'm using my own funds as basically a business cash flow machine. And it covers living expenses, and whatever my dividends don't cover, I bridge with margin. So I want to talk about these covered call ETFs because you're going to see a lot of comments, and you can go back and look at the other videos about NAV erosion. Okay. So covered call ETFs often show flat or negative share price performance if you look at a traditional chart. I evaluate these slightly different than a routine growth ETF or growth stock. I evaluate total return on investment when I'm looking at these. So that would be the income or the dividends plus or minus the price movement, not just price alone. I use Morningstar's performance tab to review the growth of 10,000. What this does is it includes the dividends reinvested. And you can also look how that performance is versus the S&P 500.
So I'm going to the extreme version go with. Let's go with. To put in a Hail Mary at this point.
The NASDAQ or other indexes. So basically, it's just like having a rental home, right? If you're just
I'll get one wild man.
calculating depreciation and expenses and having to fix the air conditioner, of course it's going to look like a bad investment. But when you add rent payments that you're receiving and cash flow that's coming in, then you look at it from a balance sheet perspective and you see your true return on investment. So a fund might decline on paper 5 or 10% in price, but still yield 25 to 75% in income, and that's the real return on investment. This strategy focuses on cash flow with covered call ETFs, not capital appreciation. As you can see, I have a blend of everything. So traditional growth comparisons can be misleading without distributions and understanding how these actually work. And then at last but not least, my growth stocks. I consider these my portfolio stabilizers and anchors for the whole system. So again, these are not all my funds, but SPYG, McDonald's, Costco, I've been buying for a long time. These provide long-term capital appreciation and stabilize my margin equity with growth. And then they have modest quarterly dividends, mostly at MCD and Costco, but the focus is on portfolio strength and appreciation. Dividends flow in and the cycle repeats. So drip shares compound automatically. The cash dividends come in like we've talked about, pay down margin and cover bills. What my dividends don't cover, I bridge with margin, allowing my entire paycheck to stay fully invested in compounding. And I always maintain at least 50% margin equity to manage risk and to protect long-term growth. I also keep put options on at all times to ensure the downside and to protect the overall account. So I've talked about that, and I'll talk about
About shit.